Today is Thursday, 10th of December, and let's kick off with the euro against the US dollar. So, as expected from yesterday, is that the price of the euro against US dollar has appreciated after all the consolidation downwards and market corrections, and it finally rebounded off and appreciate further in the day itself. Yes, appreciated another 119 pips in total as close on the day itself. So right here in the day one chart, we can see that the price is appreciating towards a key support and resistance levels at the price of 1.1115. As you can see, this is a key support level. We have seen a lot of supports based on the day one chart. So let's come into the 4-hourly chart. Alright, so we want to know how far more can the price actually appreciate further. So as we know that based on the 4-hourly chart, if we plot a Fibonacci retracement from the bottom to the top, we do know that the price has rebounded off from the 38.2% retracement level, or Fibo retracement level. So, and with the Fibonacci extension to measure the exhaustion levels, we have identified the three levels right here, and one of that is at 1.1104. That's pretty near to 1.1115, the key support, key resistance. Support and resistance level. So that is the key level that we are looking at to go for the sell again. So, but however, if you look at it from the current price right now to the key resistance level, is still a good 100 pips to be made out of it. So let's zoom in the 15-minute chart. Right now we have certain consolidation right here. We can wait for the price to consolidate further and to wait for the sell, to wait for the intraday buy opportunity. Alright, so what we can do is in the 1-hourly chart, either we wait for the price to retrace to at least the 20 moving average, or we can use a Fibonacci retracement from the previous low to the high and wait for it to reach a key a significant retracement level based on the Fibonacci retracement, probably at the price of 1.0947, retracement level 38.2%. Alright, so that's for the euro against the US dollar. Now we have the New Zealand dollar against the US dollar. So in the morning itself at 4 AM, the Reserve Bank of New Zealand has decided to keep the rate unchanged. Alright, because mostly it is because of a property housing boom, which worries that if they cut rates further, that might be a really negative impact to the economy. And of course, the government wheeler, he felt that the current accommodation for monetary policy is enough for them to keep inflation just right at below 2%. So anyway, let's come back to the technical chart itself. Let's take a look at day one chart. Alright, so price is somewhat back to the price of 0.67 cents, and that is kind of a level, currency level that the Reserve Bank of New Zealand might be uncomfortable with, which Wheeler has also mentioned that the currency level should be lower in order to keep inflation on track. So if you zoom in back to the 4-hourly chart, it is actually at the previous high, alright, at the exhaustion level based on Fibonacci extension at the price of 0.6757, and it is also back to the top of a rising trend channel, which has kind of been broken before previously. So this could actually be a good price to go for the sell again. Alright, so let's zoom in the 1-hourly chart. Alright, we can see that it has slightly closed above the exhaustion level, so we might be expecting the price to appreciate just a little bit further, you know, before it actually continues to depreciate. In the 1-hourly chart, we do note that there was actually previously a rising trend channel which has already broken below. It came all the way back to the bottom of the broken rising trend channel, went up slightly and came all the way down. Right now is still hovering around the bottom of the rising trend channel. So however, it does show a lot of exhaustion right here, a lot of uncertainties. But however, if we really look at the currency level, something might happen, and I felt that the price will soon enough resume depreciation. Bear in mind that the Federal Reserve is still looking at raising interest rate this month in just another 6 days on the 16th of December. So let's wait for an opportunity to go for the sell, probably back at the 15-minute chart. I pretty like this formation, this structure right here. So probably at the price right now could be a good price to go for the sell. If you're looking at something a longer term, you may want to go for the sell soon enough, but probably you may want to set your stop loss at least somewhere the price of 0.6813 to be safe. So that is for the New Zealand dollar against the US dollar. And next we have the pound against the US dollar. So this is day one chart. So price has finally appreciated again within a falling trend channel ever since it rebounded off from the bottom of it, retraced very significantly, and then right now yes, rebounded off. So let's go into the 4-hourly chart. Let's just take a look right here with a Fibonacci retracement from the bottom to the top. Right, so that was somewhere at the retracement level of 61.8%, but that's not so much of the reason. In fact, it just rebounded off from the key exhaustion level, the price of 1.4955, and then it just appreciated further, and finally broken above the falling trend channel within the falling trend the falling trend line within the falling trend channel. So that signals for the price to appreciate further. And of course in the day one chart we do know that the price is still appreciating towards the top of the falling trend channel. But of course the first level that we have to really look out for is at the price of 1.5321. That is the final exhaustion level, key resistance level, and that is somewhere close enough to the top of the falling trend channel as well. And later on at 8 PM plus 8 GMT we have the monetary policy summary and official bank rates. Of course we have the official bank rates votes as well by MPC members, and we kind of expected that it's going to stay unchanged as well, not at least the Federal Reserve makes a decision to raise their interest rates. So from here onwards, we are still expecting the price to appreciate further, and therefore let's zoom in the smaller time frame. In the 15-minute chart right now, we are seeing the price is consolidating. So let's just wait for the price to kind of retrace a little bit further downwards, then we shall look for an opportunity to go for the buy. As of now, just stay put and stay aside and watch what's going to happen next. Alright, so that's for the pound against US dollar. Next we have the Australian dollar against the US dollar. This one itself, 8:30 AM, we have a very unexpected employment data for Australia itself, and it was being forecast that for the employment change there would be a drop of 10,000, but as compared to the actual data, it was actually an increase of 71.4 thousand. So that was a really huge gap, a very unexpected result. And of course for the unemployment rate, it has fell to 5.8% compared to the forecast of 6%, and that of course causes the Australian dollar to soar by close to 100 pips, I would say. So that shows that the labor markets in Australia has really picked up, and if you look at the whole data itself, it has really picked up since the beginning of 2015. So it seems that the target for the Reserve Bank of Australia to convert money investment sector to labor market is kind of working with accommodative monetary policy and a lower currency level. But if you look at the technical chart again, we definitely see that as it appreciated towards the 73 cents, we've seen a strong pullback over at the price. So previously I did say that the 75 cents for the Australian dollar against the US dollar is a uncomfortable level for the Reserve Bank of Australia, down from 75 cents. And this did what's happening right here kinds of proof that the analogy. So we are kind of going to expect the price to hover around this area, and subsequently we should be able to see that the price will continue to fall again. So right now it is definitely at a very good price where we can finally look for the next opportunity to go for the sell. Hopefully for the price to appreciate it again to 0.7339, one of the exhaustion level, or back to the previous high at the price of 0.7378. So within this region, that could be a good price to go for a sell, because at the end of the day, again, the Federal Reserve is still looking at raising interest rates. Alright, last but not least, I would just like to touch on the dollar against the Japanese yen. So based on the 4-day chart, as we know that the price has been trading within a range between the price of 122.28 to 123.58, and finally we have seen that the price has broke below the bottom of the range, and therefore that signals for the price to depreciate further from here. So right now we are seeing that the price is sitting at the support level at 121.77. It might probably go into another consolidation. Or if we look at the previous chart pattern, this dip downwards could be a signal that the price is about, or rather ready to appreciate further, and even broke higher than the top of the range previously at the price of 123.58. So instead I will be actually looking for an opportunity to go for the buy. So what I'm going to do right here is to again plot the retracement level from the bottom here to the top, and we have seen that the price has broke below the retracement level of 30.2%. It's about to touch the retracement level of 50%. So probably we can still expect the price to kind of depreciate a little bit further. But if you look at the day one chart, it is since supported at the retracement level of 30.2%. So we're gonna just have to wait a little bit further, observe a little bit further to see if price will rebound off from here, or will it still retrace further before we go for the buy. Alright, so that's for the dollar against Japanese yen, and with that I've come to the end of today's trading analysis video. So thank you for watching, and see you again tomorrow.